Small housekeeping update before I launch into a EURUSD stroke dollar index clip. So this is going out on the Market Sniper, where all FX and equities and aspects pertaining to technical trading will come out. That's not of a crypto nature. If you want to follow the technical trading of a crypto nature, you're going to need to be on the Crypto Sniper, following the YouTube channel, that Crypto Sniper. Also, all socio-political, economic, and financial reset aspects will be run off the Reset Sniper. So there's quite a bit of activity that will no longer come through the Market Sniper. That is coming through the Reset Sniper on YouTube and the Crypto Sniper. So this is the Crypto Sniper icon, for example, and if you're interested in that realm, then go there and subscribe. And if you're interested in the financial, political, and economic aspects, go there. Okay. Also, in terms of comments, I'm very happy with being challenged and alternative opinions done, if done respectfully. I don't have an ads revenue. I'm not chasing numbers. People that swear or just behave badly or just keyboard warriors, I'm just blocking you immediately, and you won't be allowed on any of our channels, and that's a lifetime block. So I just want a really mature feed, and I will eliminate quite ruthlessly people that are just immature. All that said, thank you for being here, and I do value those that do come here, whether you elect to comment or not. Let's carry on with it. So this is the US dollar index. The dollar index has a large amount of euro. I'll refer further to that later. This was clearly in a selling period. So this is the daily. This is a super macro in an event. So we've had the dollar weakening for quite a long time. We can go up in even bigger time frames and see where we've been standing with this. That was a big sell-off. Over there was a sustained period where we were having a bit of a battle. That marginally lower low was a bit of a concern that it was broadening, because then it wasn't going to be continuation. It had attempted to move up and ran into heavy traffic above 100. There wasn't much that was going to hold it up there for a great deal. Consistently sold off the dollar and set up this inverted, which has now performed to target. So that's the more macro element. Let's have a look at the shorter term trend, which you can see has been a bit of a reversal from those slightly more giddier heights up top here at around about 105s, and as I say, not in an extended period. This inverted is a little bit classic of a first setup in a new trend. It's got quite a steep underlying grind line below it. So there's possibility for later overperformance, but for now, in terms of what's happening, if we drop a time frame and bring it down, actually I'm not going to be able to do that on this particular broker, you will see that we got a nice little squeeze in here, went very quiet, leaned on its funnel line, and then spilled to the interim, rally at the interim, and then very quick progress. This is interesting because it's classic case of progress decay, which is what we refer. You'll learn more about that on HVF Theory Weekend. And on our trading metamorphosis program. Go to the website if you're interested, themarketsniper.com, getting started. That was your down leg, bit of broadening in it and a gap down over there to an exhaustive point there with a hammer. It's kind of the low of what was a small, quite steep, little channeled bear flag. So we can label that a bear flag, for example. So big B, EAR. And then you ran on down. Interesting aspect about targeting. It's one of the most valuable things. People underestimate the significance of targeting. This is the big lesson you will start to learn, as I say, if you come as a HVF student. But if you're just watching these on Freeview, take that lesson if you can. It's harder to take. It requires more discipline. There's quite a lot to it. But essentially, you don't have a risk reward, and you've only sold well or bought well if you later buy or sell well in closure. This being a short trade, you would have sold first. That would have been here. But you've only done so successfully if you subsequently buy back at a lower level. And in the long case, you've only bought well if you subsequently sell well. And of course, knowing your risk reward before you enter into a trade is exceedingly valuable. So this indicated that this was a bit of a probable exhaustive target area and a good place to take shorts off, that level around here. So let's get a value for you from the diagram in and around the 92.5 zone and 93 over there. You do, of course, always overrun targets. That gave us a low, and then you got quite a sustained rally point over here. Something we do sometimes do is we point out where you get grind lines, and you'll learn more about those as well on a full program. But those are generally indicative of the potential to run through. In other words, grind lines are usually broken, and I will make that a dash line as well. So you grind it up. That was a key sign that you were breaking it, and you revisit, and then you spill. You still have quite a steep line along the squeeze, but then you get really tight, then you get your break to the downside. So being short, you want to be short early. By the time everyone else recognizes it and it's making a new low, that's the support and resistance traders. They usually arrive just in time to get handed a bit of a loss. Not so much in this case. You would have gone short here, but you would have come into a bit of churn and then the spilling benefit, and now they get all of this pushback churn. This is called progress decay, the fifth stage, post a target being made. That is weak buying overcome the second stage, and this is capitulation stage there and there, and this final bit of candles attempting to go up. Big tall wicks on the top side. Always be wary of tall wicks on the top side if you're long. And again, tall wicks on the top side, looking one way, going the other way candle. And then that's the end, the final stage. You had 3 periods of capitulation, one to your first interim, from your first interim most of the way to target, and then your finishing leg to target, pushback, pushback. So that's the Euro USD. And then if just for interest, we say, well, there's a lot of, my apologies, the dollar index, which has a large amount of euro versus the dollar. Let's correct that. We'll now go to the Euro USD as a point of interest to show you my take over there. So here's the drawing. The live market is currently trading as well. This has just been done, so I'll show you that on the live market. That's how it is. What's interesting while we're on the live market, we'll come back to this, is note your volume. Very low volume prior to your HVF break, and then as you start to break, note how the volume builds with the upside move. Then exhaustive and pain volume here. See that right there at the first dip down, and it's a loser's volume. Failed to make a significantly higher high. I'd call this a double top HVF method. Round numbers, 125 there, and you'd look at the 122 here. Where does that take you if you draw it? Well, the irony of ironies is there's such lovely geometry in HVF method and in charting, full stop, if people know where to look and aren't misdirected by indicators and other useless techniques. Well, there you go. If that is a double bottom that triggers, you might get a little rally here first. You end up with a dip all the way back down to your funnel. By the way, that funnel, key round number, blue line in dashed, 1.19 on the nose. Your H3 was to break out 119, pull back second chance, nice melt up, which is part of the equivalent of your capitulation phase on the dollar index. So a little bit of a push up, melt up, and then continued progress. Then eventually the shooting stars saying tiredness, pull back, attempt again. This is exhaustion. This is progress decay to the long side on the Euro USD. So what you might have is you might have a short-term reversal here, which could extend into a longer-term reversal. So how do you do going forward? Because this is all retrospective. What do you conclude going forward? You have potential reversal structure here on the Euro USD with geometry back to the funnel. That could mean support in the funnel and then basing out. That could then set up another upside HVF like this with an RH2 somewhere here, and then you break up, or it could just do a weak rally and smash through, and that could mean this has gone from a short-term reversal into a more medium term period of weakness. If you then break that and you dip somewhere here, you could end up in a head and shoulders scenario. You dip here and you have a rally after running the funnel, and you then would have a left shoulder, head, and then subsequent dip with a weak rally, which probably wouldn't rally as strong ideally as your left shoulder, and that could leave you then looking at instead of just a medium term, a more medium long term reversal outcome. So those are the 3 scenario casts you could get. Support on the funnel with a robust rally with a nice high to will set up further continuation to upside. The default assumption is you probably get a bit of a rest here. By the way, failure to make this, I don't call double tops and necklines particularly high probability, and I'm not in the reversal game. I'm just showing you a scenario. Failure to make this and having just a moderate pullback would also be underlyingly indicate bullishness. So if you don't dip as deep and you get a nice move back up and resisting maybe at the target level, just a little shooting star, you once again get your continuation pattern to the upside. So broadly you suspect continuation, although for a short term you are understanding of the risk of downside. Okay, that's Francis on technical analysis in the biggest FX pair, aka the Euro USD and the dollar index, which is the inverted corollary opposite, which would make that a double bottom with a possibility of a rally up in that direction. Hope you enjoyed that, and please remember those other channels, the Reset Sniper, if it's what you want. Don't come across there if you hate it and you just think it's a pile of poo, only if it's of interest to you. And then the same way on the crypto sides, on the Crypto Sniper. Finally, we also have a free webinar we'll be doing, and that's done live by me for an hour, and that will include the 7 key mistakes traders make, how to avoid them, recognizing them, becoming more self-aware so that you can avoid those mistakes is a very powerful thing. And then I will mention also the 3 gifts that everybody gets that you can utilize that require great discipline to implement, but will give you a major up leg in your trading. If you wish to be part of that, the next one is on March, I believe it's the 11th, but I might be incorrect. March the 11th, that's right, and the following one the 29th of March. So the 11th, just go to click here, themarketsniper.com up top, and click here to get started. The link is also in the comments of this YouTube. Thanks very much and enjoy your trading. Trade safe, and this is not advice.